Got some moderate gains here to start the morning, even though futures did look a little weak earlier on. Let's get to Bob Pisani. Hey, Bob.
Good morning, guys. We started on the downside. We've now switched to the upside here. Tech has been strong. China's getting clobbered again, folks, but that's not what's moving the markets. It's tech holding up. Take a look at the sectors right now. A little bit of weakness in some of the cyclical groups. Energy, industrials were down, now flipped positive, but tech keeps holding up, and communication services, which is essentially a technology sector at this point. And that's really the key to the markets right now. So the problem the market's having, and there's a little bit of anxiety below the surface, is that there's not a lot of visibility right now. We have a lack of visibility on two fronts. On the impact of the Delta variant on various parts of the economy, particularly the travel area, and on the costs associated with the inflation we've been seeing, particularly on commodity costs and labor costs. This is causing a little bit of anxiety. You've seen some recent warnings we've been telling you about this week. For example, some of the airlines where we saw trimmed outlooks. Pulte Group had terrific demand in the home building sector, but they're talking about materials and labor shortages and having a little bit of a problem delivering product because of that. Same with Sherwin-Williams and PPG, these big coating companies, talking about material shortages and higher costs. What's this all mean? If you look carefully, these are industrials and materials and travel stocks. So it's very clear there are some pieces of the economy that are decelerating a little bit at small parts of the stock universe. Look at the S&P 500 in terms of where it is from 52-week highs. Go back to that prior full screen, and I'll show you what's going on. And essentially, materials and industrials are just barely off of their 52-week highs. Go back to that prior full screen. 5% and 3%. That's not a lot in terms of where they are from their 52-week highs. The other thing that we want to note is the sectors that are growth: healthcare, technology, communication services. Folks, they're at 52-week highs. They're at their new highs, and that's why the market keeps holding up. If you look at the contribution in terms of earnings to these that these three sectors make, that's what matters. They're most of the earnings of the S&P 500. Technology is 22% of the $50 that the S&P is going to have in earnings this quarter. Communication services are 10, and healthcare is 17. Put these three together, 50% of the earnings for the S&P 500 are in three sectors. They're the growth sectors, and that's why the market keeps holding up. The other sectors that are having some problems, like industrials and materials, some issues, they're also there, but they're a much smaller part of the contribution of the overall earnings picture. And I keep emphasizing, as long as tech, communication services, healthcare keeps holding up, you're going to have a fairly strong S&P 500. Now, that doesn't mean that there isn't damage. I know. I see individual stocks all the time. I see people messaging me saying, Bob, look at this. Look what's going on with some of these big names. Boeing's 20% off of its highs. Halliburton, some of the big oil names are 20% off of their highs. Even big names that you don't think, like Caterpillar, are 16%. There is some damage underneath. What I see here, Carl, though, is most of these stocks topped out in May or June. This did not happen this week. All of a sudden, we had this gigantic plunge. It's been a slow downward move and mostly sideways for a while now, but the anticipation that there would be a bit of a slowdown later in the overall economy in the U.S., well, that game started playing out a couple of months ago. Carl, back to you.
All right, Bob. Thank you. Bob Pisani.